What's up, guys? Welcome back to Crypto Weekly Review. Today we're going to talk about Ethereum and Bitcoin. It's cooling down a little bit. Hex is at all-time highs. NFT volumes at all-time highs. DeFi locks at all-time highs. Wells Fargo is looking to get in. JP Morgan is setting up a fund. There's a lot of really hot news and a lot of cool things going on in the crypto space, so buckle up. Let's get into this.
You big all sus, yeah. I just doubled up on crypto. I just doubled down on the new vest. Now my chair looking like 2 checks. Type of money made me want a 2-step. Who next? This week I be on the moon next. Stock going up like 2x. That's a fast flip like suplex. Two really stepping like a duplex. You bet never lose change, but I do flex.
Let's take a look at the king, Bitcoin. Bitcoin Act right now looking a little bit scammy on the daily chart here. You can see that we are in a daily uptrend above the 21 moving average. But what do we have here? Our parabolic line and the 21 EMA are crossing right here. It's absolutely crucial for us to bounce out of here and get support on this pivot at 45.8. Otherwise, it's scam time. We're going back down to around, I would say, 39,533. 39,500 is definitely a possibility, and everything under that is, you already know, it's catastrophe. So let's take a look at it on the 4-hour chart. Here's a good example of what I mean why we have to hold that 21. You can see that we lost the 21 exponential moving average over here on the 4-hour chart, and you can see it's resisting. So this is what you would call a 4-hour downtrend. It looks like we are above the 21 right now in a huge engulfing candle. Let's see if we can get above this pivot and go back up towards the moon. Ethereum is doing the same exact thing. It's above the 21 EMA here. It broke out of the parabola. I think we're gonna chop around for a little while and decision time back upwards. Why? Because we have already almost burned $200 million worth of ETH, as EIP 1559 is still chugging along. It's a big pyromaniac. All right. So let's take a look at Hex right here. It says Hex topped out at 19 cents, but on other charts I've seen it did wake up to 20 cents, which is a new all-time high. This thing is gonna just keep going and going and going. You can see it is in a 4-hour uptrend. It did touch the 21 EMA and rejected hard with a huge, beautiful wick. Let's jump straight into the news. We got Wells Fargo launches passive Bitcoin fund for wealthy clients. JP Morgan also registered its passive Bitcoin fund with U.S. regulators Thursday. Wells Fargo on Thursday registered a private Bitcoin fund with the U.S. regulators, becoming the latest mega bank with an indirect crypto investment vehicle for its wealthiest clients. A source familiar with the matter told CoinDesk the new fund is passive, a break from earlier reports that Wells Fargo would pitch wealthy investors with an actively managed offering. Basically, all this means is they're not going to be trading this. You just buy and hold. And everybody who's anybody knows, buying and holding is how you make money in crypto. Trading the big swings will amplify that. But leverage trading and things like that, there's only a few people that make it. Like 96% of the traders are wrecked. And I'm pretty sure that if Wells Fargo started to try to trade this stuff, they would be extremely wrecked. I have an awesome hodl strategy. I just hodl my Bitcoin, I hodl my Ethereum, and then I make side bets on altcoin projects. Yeah, it's things like Hex, projects like Pulse, and I make these side bets, and then I shave the profits off of that, and I put it into my hodl position, and I just keep rinse and repeat, rinse and repeat. It looks like the fund is through NYDIG and FS Investments. So these are the same guys that are doing the JP Morgan passive Bitcoin fund, which is doing the same thing. They actually launched theirs on Thursday, and they do not have anybody signed up yet. DeFi projects could come under SEC oversight, says Chairman Gary Gensler. Specifically, DeFi projects that reward participants with valuable tokens or similar incentives could be regulated, no matter how decentralized they say they are. So what does this really mean, and what is the regulation going to look like? That's a pretty broad general statement, and I think that they use broad general statements because they have zero idea. They need to fill a building full of government bureaucrats to figure all this stuff out. They are completely clueless. They are completely lost. It says, according to Gensler, the term DeFi is a bit of a misnomer because these platforms facilitate something that might be decentralized in some aspects and highly centralized in other aspects. It says they want to be able to have the authority to write rules for and attach guardrails to crypto trading and lending, which is basically they want AML and KYC. So if you sell your NFT or whatnot, that they can track everybody and try to tax everybody. But I don't think they have the resources, the manpower, or the money to chase every single anonymous wallet down. It's kind of a big waste of time in my opinion, but yeah, definitely more AML KYC restrictions are coming. And Coinbase is getting prepared for these tighter regulations by taxing the hell out of traders. $4 billion they added to their cash pile since they went public. Coinbase generated $2.23 billion in revenue during the quarter ending in June 30th, compared to $186 million during the prior year period. About 95% of Coinbase's revenue comes from trading fees. No kidding. If you've ever traded on there, it's completely pointless. It's an on-ramp and off-ramp. Do not trade on Coinbase. With the rest coming from subscriptions and services, including custody for fees and storing assets for institutional clients. It says that they want to ensure that we maintain those cash reserves so that we can continue to invest and continue to grow our products and services in the event that we go into a crypto winter. So these guys are preparing for crypto winter over here. I wouldn't be alarmed by it. I think that they're a public traded company now and they're getting money for the shareholders. Let's take a look at this Glassnodes chart right here. This blue line is the Ethereum on exchanges, and it is in free fall right now. People are just pulling their money off of exchanges because they're ratcheting up the fees over there, and also the tension from the government regulators. So people are just leaving exchanges. That's the best thing that could happen for crypto. Not your keys, not your coin, guys. All right, let's look at global total value locked in DeFi. Just reached 148 billion and is rapidly approaching new asks. Ethereum, Terra, and Solana are leading the way, and the latter two printing new all-time highs in recent days. Some insights are right here below. So if you look at this chart right here, it was about 2021 in May. We had a big DeFi run in 2021, and now look, we are reaching all-time highs again in DeFi, and it's because people are leaving exchanges, and they don't want middlemen, they don't want a counterparty risk, and they don't want people spying at their wallets or turning them into the feds. And same with NFTs. NFTs are just absolutely exploding right now. It's a bubble. I think it's mostly people making NFTs. I don't think that there's a whole lot being sold. I think this whole bubble is just people hoping to get rich off of their little cartoon character Pepe that they made, which is fine. All right, let's take a look at our last story. Cryptocurrency traders seek damages from Binance after a major outage cost them millions of dollars. But Binance says it has no official headquarters. That has made it incredibly difficult for investors to figure out how and where to take the company to court. Guys, you're not going to be able to take them to court for their outages. Are you crazy? You can try, though. Ahmed was trading on Binance, the world's largest digital currency exchange, by trading volume, which is fake. And on May 19th, Binance experienced a major outage, which meant that, for about an hour, he was unable to exit his position. That day, Bitcoin and Ethereum posted their biggest one-day drop since March 2020, and the entire crypto market losing roughly $1 trillion in value. When prices fell below a certain point, Ahmed's position got wiped out. His personal losses came to about $6 million. Ouch. This loss was not fair. Ahmed, a 33-year-old who trades full-time, told CNBC, "This was something that was out of my control." Of course, their policies won't let them do it. But if you know, Coinbase is like this also, and BitMEX was like this too. Anytime there's some insane amount of volume, the whole thing crashes. Like you can't buy the bottom and you can't sell the top. It all just completely locks up, and it's just a cascade of orders. It's an insane thing. Right now we're into the wrecked plebes segment, and on this one we're not here to make fun of anybody or hurt anyone's feeling, but we talk about one wrecked plebe so that you don't get wrecked. Okay, here we go. This is, hello, welcome to the Phantom Foundation. How may I help you save 90% or more on your transaction fees? So if you're not aware, Phantom has a partnership with Afghanistan government, and that's their only partnership. And if you know what's going on in Afghanistan, here you go. All right, guys, thank you for watching. Please like and subscribe, and I'll see you on the next one. Don't get wrecked.